Is Bitcoin and crypto about to explode and surpass $100,000, or is it going to crater? We'll have a look through the cheat sheet so we can understand market momentum and direction. It's going to be incredibly important in answering that question. And then we'll dive into specific structural levels, the levels that you really need to know. Let's run the numbers. If you go to ctksmethod.org, you can hook in for the upcoming Profiting from CTKS Method structure. It's worth $699, but you can get it absolutely free. Conditions do apply, and hurry. This offer ends extremely soon. If you would like to learn Level 1 and Level 2 certification, they're now combined. Just hit CTKS certification and you will see both methods in here, and you can rock and roll with that. The other thing, please be aware that there's a 70% discount on TradingView for their Black Friday sale. I would recommend that you get the premium version. This premium version is really quite cheap. You can see it's just $1 more than the Plus version, and the premium version is what I use. To save you a massive amount of time inside the CTKS Method service, all of these tickers are marked up. Sometimes you're not going to be quite sure which ticker to actually select. So I've created this list for you, and the memes course coming out later will have these particular memes in it as well, all marked up with Level 1 and Level 2 standard certification. So hopefully that helps you out quite substantially. The link for this particular list is in the description of this video. Row 1 of the cheat sheet is the VIX, the DXY, dollar yen, 10-year, 2-year, and oil. What we can see from the start of November is that the VIX has fallen, causing a rally and risk-on activity inside the crypto market. Bitcoin is currently 96,207. We've also seen that the DXY and Bitcoin have been moving together, which is quite unusual. But it does happen, and these things do happen when there's a change of government, so please be aware of this. We can see the Japanese yen pair has absolutely decayed recently. There's a lot of sell-side pressure here. What about the 10-year? It started, went up, and has been retracing, and we can see that with the 2-year as well as oil. It's in a downtrend currently. All of these charts are on the daily basis. Row 2 of the cheat sheet: junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. We've seen that junk bonds have been coming up, and that's been putting a lot of risk-on activity inside the crypto market and also the stock market. We've seen the euro dollar decaying. Generally, we see a positive and direct correlation between Bitcoin and the euro dollar. Because of the change in government, we're not seeing this at the current time. But it will take a little bit of time, but this relationship will restore itself. You can also see that the Aussie dollar is under pressure. And when we look at the euro dollar, it's starting to actually break out of a negative channel. And that could mean the Aussie dollar is set to rally as well. With geopolitical conflict easing somewhat, gold took a recent hit, so just be aware of that. Silver is currently from the start of November in a downtrend, as is copper. At the moment, the markets are being primarily controlled by Row 1, the VIX, and Row 2, junk bonds. Row 3 of the cheat sheet is the S&P 500, the Nasdaq, the Dow, and also the Russell. We've seen from the start of November that the S&P 500 has been doing well. That's because the VIX has been coming down and junk bonds have been coming up. We can also see the Nasdaq, the Dow, and also the Russell have been doing quite well. There's a slight degree of weakness coming in on the S&P 500 and the Nasdaq currently. Not so much on the Dow, and the Russell is holding steady at the current time. No matter what market you're trading, the US stock market is incredibly important. In fact, no stock market can resist the pull of the US market. If the US markets start to weaken and retrace, you're going to see retracements in all global major indices, so please bear this in mind. Therefore, it's very important at the current time to track the VIX and junk bonds. You can also currently see the Japanese market is very weak. Looking into row 4, which is Apple, Microsoft, Tesla, and Nvidia, we can see from the start of November that as the markets increased, also Apple did the same. Microsoft is coming up, Tesla is coming up, and Nvidia is coming down. It's important to track weakness and strength. At the current time, Apple is doing quite well. It's still really strong. When we look at Tesla, and we'll have a look at the structural levels a little bit later on, it's starting to show signs of weakness. Obviously, Nvidia is weak. Microsoft is reaching a point where it's not sure if it's going to go up or down. Row 5 is crypto total market cap, Bitcoin, Ethereum, and MicroStrategy. We can see that Bitcoin and total crypto market cap have been following each other, and we're seeing a degree of strength after that pullback in the last 24 hours, which saw a lot of positions getting liquidated inside crypto. Bitcoin is also going up. Just please be aware, as the VIX comes down, we anticipate that Bitcoin, crypto, and the stock market will come up, but we would want confirmation through junk bonds as well. We can see Ethereum is starting to rock and roll. Ether's been very weak and has had a lot of short interest in it. It's starting to just take out that short interest at the current time. And we can see that MicroStrategy did incredibly well until the mainstream media news hammered it to hell and said, why don't you just buy Bitcoin? We'll also look at the MicroStrategy levels coming up, as well, of course, as looking at total crypto market cap and Bitcoin structural levels. And guess what? We'll also throw in ETH. You can think of row 5 as like the major indices for the crypto market. Inside row 6, we look under those indices through Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic. We anticipate that Bitcoin will move in alignment with Litecoin and Bitcoin Cash. That is, if there's weakness in Bitcoin Cash and weakness in Litecoin, we would expect that to translate into weakness in Bitcoin. This doesn't mean that Litecoin causes Bitcoin to move. Far the opposite. What actually occurs is that when we get negative momentum inside the market, we typically see the smaller projects get hit first. They're more risk sensitive. So that's why we want to pay attention. We can see that Binance Coin did that big sell-off over the past couple of days. Of course, these are daily charts, and then did a bit of a recovery play. Also, Ethereum Classic is in the process of breaking out. All in all, things look relatively positive for the crypto market. Row 7 is ADA, Solana, Dogecoin, and XRP. We can see from the start of November, the alts are following Bitcoin's gravitational pull, and that's what we expect them to do. Solana is following Bitcoin. What about Doge? It's following Bitcoin. Notice this basing pattern. After a long rally up, the gains are being digested on Dogecoin. And we can see that XRP started a little slow, but it's really caught up. XRP has done fantastically well, especially on the news that Gary Gensler is getting the boot. It's time to mark the charts up with Level 1 and Level 2 standard certification. We're going to go through all of those different variety of rows that we looked at. Now, particularly, the VIX and junk bonds are the two most important charts for you to keep your eyes on. Make sure that you look at the structural levels. All of the structural levels are available as TradingView indicators inside the service for all of these rows. Bitcoin is the most risk-sensitive asset class in existence. That's why it's very important to know where it's headed. In many respects, we can look at Bitcoin and understand where the VIX and junk bonds are headed. That's why a lot of people don't know how to time financial markets, because they cannot look across multiple charts and stack probabilities. But that's what we do here each day. These different price labels have just been brought on top of price action through the indicator. Let's pop that on. Bitcoin had a heck of a rally in the past 24 hours. A lot of people were exiting the crypto market as the price came down. Now, we don't do that because we always seek to buy on red and to sell on green. We have structural awareness because we know where smart money is going to come in and support price and where it's going to seek to sell the market down. We can see that there's multiple levels of confluence where the sellers will be inhabiting at the 98,546 and the 97,982 level. We've also seen that Bitcoin has done a really good job of pushing through this structural resistance at 96,036. One of the ways that you can read these particular numbers out is that these structural levels are viewed towards the right. Now, what does that mean? It means that, of course, price is right here. These levels are rightwards looking. So you look across to the right to see where price is either going to get caught or resisted from a structural stance. One of the most important things that you can actually identify on the charts are positive and negative CTKS gaps. A positive gap will exist between one level of support up to the next level of resistance. It starts here, it ends there. A negative CTKS gap will start at a level of support and end at a lower level of support. Now, what does this mean? In terms of these particular areas on the chart, price can move very, very quickly and very erratically. It's a high volatility area and you need to be aware of that. What the bulls are going to seek to do is to confirm this 96,036 as structural support and challenge the 97,982 and 98,546 level. And just please bear in mind that there is not a level of structural overhead resistance at 100,000, as is commonly assumed by retail. We can't just look at Bitcoin's chart to determine where Bitcoin is going, and that's kind of weird, but it's the way the crypto market works. That's like saying you can't look at Apple in order to determine where Apple price is going, because it's controlled by the VIX, it's controlled by junk and the major indices. This way of looking at price is something very, very special for the CTKS method. And you can learn how to draw up your own structural levels through Level 1 and Level 2 standard certification at ctksmethod.org. Let's pop on the structural indicators so that we can see where things are cooking inside total crypto market cap. We saw that we breached the $3.18 trillion mark in crypto, and we've been rallying up really, really nicely. But this $3.3 trillion sell area is causing a bit of grief to Bitcoin at the moment. It's also putting negative price momentum inside the crypto space right across the board. And of course, this includes Bitcoin and all the alts. One thing that you'll notice, there is not any structural support or resistance up until 3.3 trillion for the resistance and 3.18 for the support. This means that the crypto market will be looking towards Bitcoin structural levels at the current time. Therefore, when we look at other charts such as Solana, it's very important that we understand Bitcoin's gravitational pull and the role of its structural resistance and support levels on Solana. Let's just pop on Solana's own structural support and resistance levels. We can see Solana just sold down and nearly tapped that 218 mark. One of the things that you want to bear in mind, if you see positive action like this, it means the sellers are very strong at that specific structural level. If you see the opposite, just not even reaching up to a higher structural level, that is, price doesn't reach up, the sellers are very strong here. So we can see strong selling activity at the 244. There is a positive CTKS gap up to 258. So price could move very, very quickly once we breach that 244 level. That's if the bulls gain control. Now, what do the bulls need to do in order to do that? They simply need to get above 244 and keep the positive price momentum going by confirming 244 as structural support. That creates positive structural attraction to the 258 mark. If we can't get above 244, we create negative structural attraction to the 233. If we can't hold that, we create negative structural attraction to the 218 mark. So these things are very important to understand. You must know where your structure is in order to determine where price can go next. But of course, you don't look solely at Solana in order to understand where Solana will go. And this is a huge mistake the vast majority of technical analysts make. Or indeed, just normal traders and investors. They simply look at the chart and say, oh yeah, okay, 244. Well, what about Bitcoin? And what about total crypto market cap? And what about all the tiered charts in the rows? Everything is intercorrelated and interconnected. Looking at Ethereum, we can see that ETH has had a monstrous run up. It's doing really, really well. Let's pop on the structural indicator so we can see what level 1 and level 2 standard certification is saying right now about Ethereum. We can see this level at 3647 is quite an important level. ETH has been making its way up through structural gaps, and it's currently using the shorts as fuel to liquidate them and go higher. One thing to bear in mind are the structural gaps inside of price structure. Please be aware that these gaps can get filled in either direction, from the positive side to the negative side. Price is always moving in a wave, so just please be aware of that. Ethereum is going to have issues when it gets to around that 3700 area. That is quite steep structural resistance. We've got a bit of a positive fresh air gap here, or positive CTKS gap, so we may well overshoot it, but just please be aware that 3700 is an area where the bears will seek to push Ethereum's price down through these structural levels. And of course, what we need to understand, if Bitcoin is increasing, that means that Ethereum will break to the upside. If Bitcoin is decreasing, Ethereum will break to the downside. So look at Bitcoin, total crypto market cap, and then the chart that you put money into. We know that MicroStrategy has been really volatile at the current time. What actually happened, structurally speaking? MicroStrategy couldn't break the 540 structural resistance level because it was light in terms of structural resistance support. In this area, we saw a big drop down to structural support at 410 and then a lower one at 380. So one thing that you need to be always conscious of, if it's light in terms of structural support, you need to actually know what the lower levels are, or you're going to get caught completely off guard. Many people would have sold into support and then bought on the retracement only to see it come down again. Currently, we're 388 on MicroStrategy. The key for the bulls is to get above 410, and then we have a positive CTKS gap and we could well challenge the 540 level. If the bears gain control, they'll seek to push it down below 364, and then we have a negative CTKS gap where things could get very volatile. Provided that Bitcoin junk bonds increase in value and total crypto market cap keeps on coming up, we would anticipate MicroStrategy to rally upwards. Tesla has also been under a little bit of resistance of late, so let's pop on the indicator from the service and see what is cooking inside Tesla's market structure. We can see that this 355 level of overhead resistance it's not been able to be overcome. You see this basing action from 352 to 355. We tried to get up and just couldn't do it. We did an underside retest, had a negative fresh air gap, and we've come down to 333. This is a high volatility area. Now, what it particularly means, from 333 up to 352, Tesla could recover in a heartbeat. That's why you need to know where these gaps actually exist. Always remember, a gap starts at a structural support level and ends at a structural resistance. It's not from here to here, it's from 333 to 352. That's a good thing to remember. And when you're in this particular case, negative structural attraction means that if you can't hold on to the 352, it's opening up the 333 level, and that's exactly where it found support. The CTKS method is called the world's most powerful smart money buy and sell level detection system for a reason. If you go to ctksmethod.org, you can hook in for the upcoming Profiting from CTKS Method structure. It's worth $699 US, but you can get it absolutely free. Conditions do apply, and hurry. This offer ends extremely soon. If you would like to learn Level 1 and Level 2 certification, they're now combined. Just hit CTKS certification and you will see both methods in here, and you can rock and roll with that. The other thing, please be aware that there's a 70% discount on TradingView for their Black Friday sale. I would recommend that you get the premium version. This premium version is really quite cheap. You can see it's just $1 more than the Plus version, and the premium version is what I use. To save you a massive amount of time inside the CTKS Method service, all of these tickers are marked up. Sometimes you're not going to be quite sure which ticker to actually select. So I've created this list for you, and the memes course coming out later will have these particular memes in it as well, all marked up with Level 1 and Level 2 standard certification. So hopefully that helps you out quite substantially. The link for this particular list is in the description of this video.